I believe that eventually, around 2050, after 2050, maybe it's 2055, Bitcoin becomes the unit of account. And what happens is I sort of put a price of about 85 million on Bitcoin based off of just monetary debasement, total global store value assets growing, Bitcoin only getting 20% of the global store value assets, which is like insanely conservative. But then there's the big jump when I believe everything will become repriced in Bitcoin.
Welcome back to the Culture Bit. Today we are joined by Mark Moss. We discussed everything from Bitcoin's role in the 50-year quantum wave framework, macroeconomics, AI agents, and why you should be bullish on Bitcoin for the long term. Mark will be speaking at Bitcoin 2025. So if you haven't secured your tickets yet, head to b.tc/conference and use code BM10 for 10% off at checkout. Now on to the show. Mark, great to have you back on the Culture Bit. I know it's been a while since we last chatted. We last spoke leading up to the Bitcoin conference in Abu Dhabi that occurred this previous December. I know you had a great keynote there where you painted kind of this vivid picture of a 2050 world where Bitcoin is the global unit of account. So for our audience, maybe let's start by just giving a brief refresher on what your keynote is about. And that can set the baseline for the conversation today.
Yeah, I'd love to. I loved giving that keynote. It's a topic, it's a subject. I mean, I've kind of spent my career on, but really the last 4 or 5 years I've been pounding the table on. And I know Bitcoin Magazine loves to get sensational headlines. They posted something on Twitter like a couple of days ago, like Mark Moss says $400 million Bitcoin, which is like the most ridiculous statement in the world without any context. And so
Absolutely.
that came at the very end of a 30-minute keynote. And so without any context, without any time frames, like it sounds ridiculous. And it's gotten a lot of comments on Twitter over that. So let's break that down a little bit. So what happens is when you look through the long lens of history, and I'm talking thousands of years, really hundreds of years. We haven't really had technology for that long. So really hundreds of years, you can see that it's always technology that changes the world. It's not the other way around. It's not politics. It's technology. And it changes the way that we work, the way that we act, the way that we integrate, the way that we communicate, all of these things. And it has typically has like this centralizing or decentralizing nature. So for example, in the 1500s, we had we had the gunpowder revolution. Now, at the time, the government structure was very centralized. We had sort of like this monarchy, this feudal system. But the gunpowder revolution distributed power differently. And then it led to more of like a decentralized world, for example. Then about 250 years later, notice this 250-year theme. About 250 years later, we had the invention of, the Industrial Revolution. So we had mechanized machines. And at the time, we had this like sort of farm cottage industry. And all of a sudden, we had these machines that could do the work of 5,000 men, and it brought everybody into cities and factories, and it had this very centralizing force behind it, right? And so we can see these, and this pendulum swings in about a 250-year time frame. Within that, we have different cycles. One of which is also a 50-year technological revolution cycle. I call it a quantum wave cycle, where the world really witnesses this quantum leap forward. And that happens about every 50 years within that. So really starting at the Industrial Revolution in the late 1700s. And then we had the steam engines and railways, and we had the steel, electricity, heavy equipment. Then we had oil fuels, automobiles. Then we had microprocessors, personal computers, telecommunications, internet. And now we're about 50 years later. And so what we can see when we go back and we understand these cycles, we can see about every 50 years we have, and it's a cluster of technology that happens. It's not just one new piece. The iPhone is an extension of the last cycle. It's a computer and a phone put together. Cool. We're talking about a new set of building blocks that allows us to build things that we never envisioned. And so this happens on a repeating cycle. We're now in the 6th time this happens. Like the Bitcoin halving cycle, if it happened 2 times, it's likely to happen a third. If it happens a third, it's likely to happen a fourth. So it's like the Lindy effect. The more often it happens, the longer it happens, the more likely it is to continue. This is the 6th time it happens. So we understand that. Another thing that we understand is with technology, there's something called the diffusion of innovation. And it looks at how new technologies reach adoption. And so that also has its own cycles. And we can use like an S curve to measure how that technology will reach full scale adoption. Typically, that's considered about 80% adoption. So we have that diffusion of innovation. And then we have sort of the psychological level. You've all seen like that bell curve that has like the true believers, the early adopters. There's a chasm. And then there's the early majority, late majority. So we have a bunch of models that we can use to measure technology adoption. From these giant cycles all the way down to little cycles. And then we have money. And so, Bitcoin is technology, but it's also money. And so then through thousands of years of history, Safety knocked it out of the park, obviously, with his book, Bitcoin, the Bitcoin Standard. But you can see that through thousands of years of history, there's been all types of money. And it follows an evolutionary path from a collectible. Oh, look at this cool rock or seashell. Kind of cool. This Pokemon card, this baseball card. And sometimes, not always, but sometimes that collectible could evolve to become a store of value. Not every baseball card's a store of value, but some are. And a lot of wealthy people store their wealth in a lot of collectibles. Fine art, old cars, jewelry, baseball cards, Pokemon cards, whatever. Some of them, not all of them. Then, if it has the right attributes of money, it can become a medium of exchange. If it's portable, divisible, durable, recognizable, saleable, fungible, all those things, it can evolve that, and then eventually it can become a unit of account. So we take all of these things together: the evolution of money, the way that we measure technology adoption, the 4 phases of technological adoption. We understand laws like Gresham's law, and I basically took all this thing. I mean, I'm trying to give the short version, but I took all these things together, bundled them together, and then overlaid it with where we're at, where we've been since 2010, and then so now we're forecasting like Bitcoin's adoption cycle, not just as technology, but as money. And then I overlaid it with what our own government, the U.S. government, the CBO, Congressional Budget Office, projects out as continued monetary debasement. So then we add all these things together, and it gives us, I put together a map of where I think Bitcoin goes in 2030, 2040, and 2050 based off of this 50-year cycle. So that would take us all the way through this cycle, 4 different phases: the monetary evolution, the diffusion of innovation, the monetary inflation, and I forecasted it out. And the number is outstanding. Outstanding. And like I said, if you just look at that number on its own, 400 million, like how the heck do you get there? And let's just go to spoiler alert. I believe that through the end of this 50-year cycle, looking at all of these factors put together, and there's a lot of data behind that, I believe that eventually around after 2050, maybe it's 2055, Bitcoin becomes the unit of account. And what happens is I sort of put a price of about 85 million on Bitcoin based off of just monetary debasement, total global store value assets growing, Bitcoin only getting 20% of the global store value assets, which is like insanely conservative. But then there's the big jump when I believe everything will become repriced in Bitcoin. And that's what people they don't comprehend. It blows their mind. In theory, they're like, oh yeah, eventually Bitcoin will be the unit of account. Eventually everything will be priced in it. But what does that mean? Like, let's put a number to that. Right now you see a chart. Jesse put it out first. Michael Saylor uses it a lot, the $900 trillion of store value assets. But that pie continues to get bigger. As we continue to have monetary debasement and inflation, the denominator keeps pushing that basket bigger, bigger, bigger. And just at the current rates we're on, which, by the way, as I said, the CBO projects it to go up like a hockey stick. But if we just chart the same path, that puts global store value assets in 2050 to about 8.5 quadrillion. So,
can't slow the money printer, that's for sure.
Yeah, we're not gonna stop the money printer. So it's like it's not like Bitcoin has to take all 900 trillion. No, it's the pie keeps getting bigger. Bitcoin keeps getting a bigger piece of it, but the pie keeps getting bigger. So we're 8.5 quadrillion. Bitcoin gets 20% of that, but then it's the repricing.
Awesome. Yeah, no, I appreciate the walkthrough there on everything you talked about there at Mina. Obviously, I know at Bitcoin Magazine, sometimes we like to take the price prediction numbers and blow it out, but the context there is really important. And especially with Bitcoin kind of approaching new all-time highs at this 100K number, we have a lot of net new Bitcoiners here. So they see that and they're like, what is this Mark Moss guy talking about? Like, why does he have so many followers? Why are people listening to what he has to say? And we're in this really, to the points you're talking about in terms of where we're at in this current cycle, this current 50-year cycle.
Yep.
it might be hard to digest from a net new perspective, like, hey, oh my gosh, there's all this money printing. Bitcoin's continuing to increase in value. The previous administration, especially for anyone based here in the U.S., was very anti-crypto. Now we have a new administration here that's pro-crypto, pro-Bitcoin. I guess my question to you is where are we at in this 50-year cycle? If Bitcoin kind of came online in 2008, 2010, where are we at during this cycle? And where do we see things going in the near term?
Yeah. So I think of it as again, so you have to look at all of these things. So like there's never one
Right.
data point, right? You're trying to look at a lot of data points. So I would say that there's 4 distinct phases of that cycle. And I believe we're in the second phase right now. So the first phase, and again, if you overlay like a diffusion of innovation chart, but in the first phase is that eruption phase where it's like, hey, this is a new thing. What the heck is it? Very speculative. And that phase is marked by a couple things when we're looking at technology. Like number one, that new technology is held back by things such as scaling. It can't scale. It's too slow. So in the internet days in the 90s, we had the .com boom and explosion and webvan.com and pets.com. But by the year 2000, less than 10% of people had bought anything online because the internet was too slow. It didn't scale. Automobiles, they blew up within 3 years of the automobile, the Model T. We had 250 manufacturers pop up, but they didn't scale. There was no roads, there was no gas stations, there was no tire manufacturer. So every technology has the same thing. And what happens is it leads to this rampant speculation, which created this altcoin boom. Because Bitcoin couldn't scale, well, let's make altcoins that are faster and they're cheaper and they're more private and they're do smart contracts and they're blah, 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 right? In the internet days, we saw the same thing. We had private intranets popping up all over. What happens as we move to phase 2, we move into, and again, if I laid a diffusion of innovation chart, you have the innovators and the true believers, and then you have the early adopters. And so that's sort of what we call the frenzy phase. And so now this is represented by the institutions coming in, the sovereigns coming in, the Michael Saylors trying to gobble up Bitcoin as fast as possible. Like the frenzy is here, right? We were talking about a publicly traded Bitcoin company called Matador that I'm a officer of. And so we're seeing these companies popping up and we're just trying to gobble as much Bitcoin as we can. It's like a frenzy. And it's way bigger than the retail. Right? We're not talking about thousands or tens of thousands or hundreds of thousands. Now we're talking about millions. We're talking about billions of dollars coming in. And if you look at it like an S curve, the way that you use an S curve is the time it takes to go from 0 to 10% adoption is the time it takes to go from 10 to 90% adoption. So the second phase is like the parabolic turn. So that's where we're at. We're moving into that. We can see the states in the United States. We can see countries starting to adopt it. We saw the UAE, I believe, announced like a $400 million Bitcoin holding or purchase. And so we're seeing this frenzy happen. That's where we're at. And so the reason why I think that's important to understand is the makeup of the market is different. So the crypto space has gone straight meme coins, and over the last couple of weeks, it's just like dead. Like people just hate it, right? And so that's just a part of that's how this works. That's part of the cycle. Just like when I started an internet business and e-commerce business in 2001, a year after the .com boom, people laughed at me. I said, "Hey, I built this store. I want to sell your products on my website." They said, "No one's ever going to buy anything online." I said, well, I beg to differ, and like, I'll just buy your products. Like, it's on me, right? They said, we don't even want our products being sold on the internet. It had like such a bad name at that time, right? So this is all part of the cycle. This is how it goes. Like I've been there, done that. So we're in phase 2. We're going into this frenzy phase. We see the sovereigns coming in. But the thing that I just want to encourage everybody at this point is that what happens for most people, humans are horrible investors. We don't have the right lens. We use emotions. But one thing that typically people do is they always look in the rear view mirror. So Bitcoin's too expensive. Too expensive compared to what? Compared to where it was 5 years ago or compared to where it will be in 5 years from now? And so we want to be looking in the windshield, not the rear view. And so what I would just say is like in the second phase, which we're in now, the second phase, that's where the most of the growth happens. That's where the S curve turns parabolic and goes straight up.
So there's certainly a lot of, I love this concept of your 4 phases here, especially, it's super exciting, to our listeners being like, I'm in the frenzy phase. There's a ton to capitalize on, either from the institutional side or even the retail side. Right. And, I had the privilege of talking to your colleague, James Lavish, over at the Bitcoin Opportunity Fund a couple of days ago. And, James likes to talk a lot about the positive tailwinds that have allowed this type of momentum to occur. and spur along what's very necessary from an adoption curve standpoint, right?
Yeah.
And I think one of the really interesting components of this frenzy phase that you're talking about is that is actually not falling in line from a couple of years ago what a lot of the game theorists out there were talking about. So used to be that Bitcoin was very grassroots and that was going to be a bottom up effort. And I think that probably resonated more so true with the previous administration here in the US. But now that we have a new administration here where they've overturned SAB 121, they've pulled back some of the gap accounting things that required institutions to list Bitcoin as a depreciating asset should the price fall. And in addition to that, we have all the Bitcoin ETFs. And so from like a legal and general counsel standpoint, now there's like appropriate vehicles for these institutions to come in. We're seeing them just come in mass as the dollar's continuing to be debased and put some of their treasury into Bitcoin, which is all positive momentum. Just curious in your purview, there's a lot of great things happening in the space, but what are maybe some things that we're not looking for that could, in the short term, maybe slow down Bitcoin adoption?
Well, I would say that, first of all, let me answer that question, but a couple things. Like number one, mentioned the Bitcoin Opportunity Fund. I'm a partner with James, and we're just opening up fund number 2. But the reason why that I want to just hit on that for a second, and you mentioned all these institutions coming in and the buying, is because in this phase, as I said, phase 1 was marked where the technology was too slow, couldn't scale, so you had this altcoin explosion. What happens in phase 2 is you have real money looking for real projects. And so what happens in phase 2 is it's Bitcoin and what I like to call Bitcoin derivatives, or really what they are is companies building on and around Bitcoin. So you're seeing the public plays around Bitcoin, like the MicroStrategies or the MetaPlanets, Bitcoin miners, publicly traded miners, trading multiples of Bitcoin. So so that's important. And so what we're doing with the Bitcoin Opportunity Fund and Matador is like we're building on and around Bitcoin. And we're investing in these companies that are building on and around it because that's where it is. That's the big change. And that's what we're looking for, in this next phase. Now, back to the question, like what are some things that could hamper it or hold it back in the short term? Well, what I would say is that from a macro lens, we think about Bitcoin in terms of hodl waves, or there's any number of indicators, SOPR, or NUPL, or Puel multiplier, or whatever, right? And those are all really important metrics to look at, or indicators to look at. But I think overall, more important than even the Bitcoin 4-year halving cycle is really the global liquidity cycle. That's what matters the most over anything. And so I spoke at a conference in January, and I was just saying, I said I believe the first quarter of this year is going to be very volatile. You mentioned a new administration taking over, and the previous administration did a lot to goose the market, to manipulate the market, if you will. And the Trump administration took over a new administration that's just full of landmines. So, for example, because the Fed wanted to stay in a quantitative tightening cycle, Janet Yellen at the Treasury just completely front-loaded the front end of the Treasury issuance. So now the new administration all of a sudden has, was it like $6 trillion that they have to deal with and get refinanced? Whoa, that's a big problem. Number two, what Janet Yellen did again to sort of front run or circle around what the Fed was doing was drain the TGA, the Treasury General Account. So now they got that and it's like basically emptied. And so like these were things that we're doing to keep the market going, and all of a sudden now it's like, well, shoot, now we have no money. They did, the debt ceiling debate that we gets recycled every year. They negotiated to push it. Well, let's not talk about that until January of 2025. Yeah, right when Trump takes over. So like we have all these issues, a new administration, plus like some serious issues that have to be dealt with. And I think that's just going to cause a lot of problems. Not to mention now, Trump's coming in and really trying to play the art of the deal and threaten tariffs with all of these nations. And it's all going to work out, man. It's all going to work out. Number going to go up, but like now, which nation's going to move first, and who's going to ease their, ease, and who's going to tighten, and what's going to happen. So we're in this period where global liquidity is sort of stalling out. I think it could take this first quarter. Maybe we have another 30 or 40 days, and I think things will start loosening up. And I think that money spigot's going to come back on. So I'd say that's like probably the biggest thing that would hold it back or hinder it, is that these things take longer. They don't get worked out in time, and the global liquidity sort of sputters a little bit, and it doesn't pick back up. Ultimately, it will. And if you have a long-term view, if you're thinking 5 years or forever like me, but even on a multi-year lens, it's like almost bad news as good news. The worse things get, the more liquidity they're going to need later.
Absolutely.
An ounce of prevention is worth a pound of cure, right? So the longer they wait, the more it's gonna cause problems, and the more the knee-jerk reaction will come, and it will blow this thing even higher. But I would say that's the number one thing that I think everyone should be focusing on, to really think about the short term and what would hold it back.
Some great insights there. I've heard you talk quite a bit about the strategy the Trump administration is trying to implement with tariffs, not as a way to get more pockets or more money into Americans' pockets, but also recognizing that you really can't stop the money printing train and that inflation is going to continue. Why don't you walk through the audience just kind of your take on the Trump tariffs? What does that mean for the U.S. economy? What does that mean for the global economy? And then how does that impact Bitcoin?
Yeah, so I've been in maybe a contrarian inflation bull for a long time, for years now. I think that even at the 6, 7, 8% inflation that we had a couple years ago, like I was saying, that's still going to be some of the lowest inflation that we'll have. Now, I think it's important to understand, how do we measure inflation. So just to hit on that really quickly, obviously the government's given us a CPI number, or CPI, right? It's an inflated number, it's a manipulated number, and that's another thing the Trump administration took over, is all the data that the Biden administration was putting out was fake. And so now we're having to deal with real data. So that's a problem. But if we're looking at CPI, whatever they want to call that number, 3%, they're telling us that Americans' health insurance has dropped by whatever it was, 25% last. It's like, no one's seen their health insurance drop. That has not happened, right? So it's a manipulated number. I think of more of the Austrian number, which is the rate of monetary debasement. So that's what I'm going off of. And that's what, back to that whole presentation I gave at MENA, I was using that number. So I think that because we're in a debt-based monetary system, money is created through debt issuance. It's a Ponzi. You have to continue to grow the monetary base. So you have that right off the bat. You have monetary debasement. Number two, sort of back to the tariffs, I've been talking about now for about 5 years, back to how technology takes us from centralizing to decentralizing, how the world is starting to break apart. And when I first started talking about this in 2020, 2021, people thought I was crazy, because the World Economic Forum was like getting bigger and bigger and bigger, and everything was going to be under Klaus Schwab, and the whole world was going to be ruled by the IMF and the BIS. And now we're seeing that the world is breaking apart. And so we're going more into like protectionism, and instead of just-in-time supply chains, it's just like, just in case I should keep all this stuff here. And so as all that stuff happens, competition starts to happen. Things are going to slow down. We have the United States now. Biden was pushing this, and now Trump is carrying it on, of like, hey, we should onshore. We should bring back our manufacturing base, onshore it or nearshore it. So when we offloaded or offshored our jobs, it brought deflation, and when you bring them back, it causes inflation. So there's a lot of that. And then back to the tariffs, to the original question. So now we're raising the prices of those goods, because ultimately what Trump wants is, he says, hey, if you don't want to pay the tax or the tariffs, just come make your stuff here. So they want to bring it all back, and that's just going to push the prices up. And so you have the continued rate of monetary debasement, plus the global competition, plus the tariffs. It just means inflation.
Yeah, no, absolutely. And I think one of the interesting points that you just touched on is that everyone's trying to explore alternative economies that best suit them. When what I mean by that, right, is like we've seen, the decline, what was formerly the G8, now the Magnificent Seven. We've seen the rise of BRICS, Brazil, India, China, Russia, look to create their own basket of goods separate from the dollar. Some might speculate that BRICS is trying to recreate the dollar, whether that's through a CBDC or their own currency. But I would argue more so that, really they're in protection mode, right? Which a lot of it was spurred from current conflicts in Ukraine, Israel. I mean, we saw what used to be a safe haven of U.S. Treasury bills get seized from Russia, who is a member of BRICS. And so they're in this like fight or flight mode, right? And we're also seeing this, like you mentioned here in the US, where we've exported all of our manufacturing, and that has increased or I guess decrease the net output of production here domestically, and in turn has essentially created a catalyst for dollars to be exported and not brought back in. So it's almost like we're re-entering this period of the opposite of like a global expanding economy. It's really interesting where we're seeing the U.S. focusing on itself, China focusing on itself, Russia focusing on itself, and at the same time we have this incredible net new asset, Bitcoin, right, which isn't controlled by any singular government. You know, I'm not saying anything new here when it comes to that, but all these competing nations kind of all collectively agree that Bitcoin is this thing that they need to pay attention to. We recently had Abu Dhabi, right, announced that they are buying Bitcoin ETFs into their sovereign wealth fund. I know Russia has outwardly said that they are mining Bitcoin, and even though they haven't necessarily alluded to the fact that Bitcoin is within, you know, one of their funds or listed as a reserve asset, you can kind of make that assumption. And the same thing with China. They've reversed their mining ban. They're starting to institute pro-Bitcoin policies. We've even seen recently in Hong Kong a replica company, I think it's called HK Holdings, being rebranded to Moon Inc., that is adopting the strategy, formerly MicroStrategy's Bitcoin Treasury playbook. So there's all of this interesting talk around just how do we, for lack of a better term, reset the economy or evolve the economy. I know you've spoken a lot about Plaza Core 2.0. And you've kind of framed it as not necessarily a coordinated reset, but more so just economic warfare. How does this shift potentially impact global markets? You know, how do you see Bitcoin as a potential lifeboat for all these competing countries?
Yeah, I mean, you brought up a lot of really good points, and you know, one reason why Bitcoin is really hard for most people to understand is because you have to understand a lot of different subjects to really get even a grasp on it, and that's why most people don't understand it, and a lot of times smart people don't understand it because they just look real quickly and I kind of get it, and they don't really understand all the different ways to look at this. So like we talked about like the technology cycles, we talked about the fusion of innovation, we talked about inflation and debasement, and now we can talk about the geopolitical angle. And those are all the really good points that you brought up. And so, you know, I think since 2013, Russia and China have both been de-dollarizing since 2013. Now, they were mainly de-dollarizing because they knew that we were continuing to debase their assets. But then to the point that you brought up, right, that really became front and center when all of a sudden Russia, the third largest superpower in the world with nuclear weapons, had their bank account seized. Not a good look. China's like, well, shoot, if we ever wanted to fight America, well, they'd take all our money too. So it basically put the whole world on notice. If it can happen to Russia, it can happen to anybody. And so to your point, you know, BRICS, everyone's scrambling, trying to figure out what's next. And I think when you understand that, and you understand some monetary history, and not even that far, just go back to the Bretton Woods Agreement in 1944, what was really put forth by John Maynard Keynes was something called the Bancor, which was really having sort of like this basket of currencies, and it was really about having like this neutral reserve asset. And a lot of people have known from the beginning that having a dollar as the reserve asset of the world was a problem. It's called Triffin's dilemma. And so that's the nation that has the reserve currency of the world is going to have to supply the dollars or the currency to the world. So we have to offshore everything so we can send those dollars offshore to bring everything back. And so this is one thing that it seems like Trump and his new pick, Bessent, are really onto, and they're trying to navigate. And this goes back to the Plaza Accord piece. But I think when you understand that whole dynamic of we always needed a reserve asset, that's why gold was there. It wasn't supposed to go to a U.S.-led gold standard. It was supposed to be more of a neutral reserve asset. That didn't happen. Now no one trusts each other. What are we going to use to store our wealth in? We could go back to commodity money. We could go back to gold, but like in a technology-driven world, how does that work? And so when you understand all of that, and you did a really good job laying that out, we have to have a neutral reserve asset that nobody can control so that it doesn't require trust in order for the world to move forward. That's just it. Like, there's no way the world moves forward together, globally trading and working together without some form of agreed on value anchor that nobody can control and is neutrally reserved. There's just no way that happens. So it's like if you understand that, that has to happen. So then the answer is, what is it? And of course, there's only one option if you really understand that today. Now, you know, forever's a long time. And who knows what forever holds. But like as of today, that's the only option. And to your point, these nations are starting to recognize it. To your point about Russia, I mean, they changed their tax codes around mining Bitcoin and holding Bitcoin. And like they don't do that. You don't change laws unless you're setting up for something. It's one thing to like turn a blind eye. It's one thing to turn a blind eye to it, but you don't like go through the process of changing laws unless you're like making a big move there. So it has to happen. It's inevitable. There's nothing else on the table today that can take that place. And these nations are already angling for it, right, from that perspective. Now, back to the Plaza Accord, what I was saying is that we have this situation where something has to change. The dollar can't remain the reserve asset because nations don't trust it, like Russia found out, and you can't also trust it from being debased. And so what China has been doing, and to your point, lots of other nations have been trying to figure out another way to do this, but what China has been doing is moving to more of like this gold standard. Now, they have been acquiring more gold than any nation in the world for decades, and we don't really know how much gold they have. On record, they have about 25 or 30% of what we have in the United States. On record, that's maybe about 2,000, 3,000 tons. But estimates from analysts say they might have up to 30,000, which is insane.
It's an insane amount of gold.
It's an insane amount of gold. So like, for example, for the last, 13, 14 years, they've allowed anybody in the world to come mine gold in China, but you just can't take it out. We'll buy it all. Like, for example, they've imported all this gold, but they buy it under all these different shell corporations and all these things. So it's really hard to trace back. And so what they've been doing through their own index is they've been letting people redeem physical gold. And so it's starting to break the gold markets around the world that are paper traded because those are inflated by paper. And so by them allowing a physical gold settlement, it's created this arbitrage opportunity that these traders are going to go after. And so what I think is that the U.S. understands this, Trump understands this, Bessent understands this. And so it's like, if China were to just say, okay, fine, we're going to back our currency with gold, 25%, 10%, 30%, whatever that number is, all of a sudden it would give their currency this boost and could be like this giant vacuum away from the U.S. dollar. So in game theory, then does the U.S. just sit back and wait for China to announce that and then just have the whole world abandon the U.S. dollar treasury, the U.S. treasury? Or does the U.S. try to preempt that move?
Right. What mechanisms do you see in place for the U.S. to try and preempt that move? Because to your point, we're in this really interesting global game theoretic situation where like China doesn't want to be the first to announce, the U.S. doesn't want to be the first to announce, Russia doesn't want to be the first to announce, and all the meanwhile, we have countries like El Salvador, we have countries like the UAE who are like, hey, we're accumulating Bitcoin and we're super happy. What mechanisms are in place here? And how do you?
Well, they're already talking about it. Where's all this talk about auditing Fort Knox coming from?
Exactly.
So let's find out about the gold. Number one. Number two, how much gold do we have? And then revalue the gold. So let's bring that gold on the books from the value in 1944 to where the value is today. Let's revalue that gold. Let's also bring on Bitcoin. Let's create a sovereign wealth fund. And so all of those things are starting to angle for that. Let's bring the assets in. Let's get the assets audited. Let's bring the value of those assets up. That's all part of it. And then it's like, shoot, okay, 10% backed, 20% backed. Right now, we don't know. Right. I have a video that I'm going to record on this specifically about the auditing of Fort Knox. And it's like, it hasn't been audited in over 50 years. Why? Now, there are some good reasons why the U.S. would not want to release that. There are some good reasons, and I'm going to talk about those. It's not all conspiratorial, but whether the gold is there or not, it both presents problems for us. If the gold's not there, that's a big problem. Like, what the heck? Like, we've been lied to this whole time. We thought we had assets. We don't have assets. But what if there's more gold there? What if we find out the U.S. has been trying to build up its stockpile to preempt this move? And now it loses its competitive advantage. Absolutely. Right? Where to get the gold, or, oh my gosh, if they're loading up gold, they must know the confidence in the dollar is dropping. Right? So there's a lot of reasons, right? I mean, it could be bad either way, right? For a system, because our financial system is built on trust. Mm-hmm. So if we can't trust it, we got a big problem. Either way. Yeah. Either way. So anyway.
Well, and it all aligns very well with just this frenzy phase. Like, there's so much going on, so many different variables happening. And like, again, circling back, the main issue, the core issue is that the dollar is debasing. no one's wanting to really say it out loud necessarily, but actions speak louder than words
Yeah.
always. For the audience, I know, we've talked a lot about the frenzy phase. I do want to talk about the importance, especially for a lot of these, Bitcoin's at all-time highs. We always see a whole entire new class of Bitcoiners that come in. They're trying
Yeah.
to always ingest as much information as they can, and education is a super, super critical component. But before we get into why you haven't missed the boat on Bitcoin, that you shouldn't fall into the trap of unit bias with Bitcoin being at this 100K number. Let's walk through the audience, the remaining phases, the remaining two phases that go beyond the second phase of the frenzy phase.
Yep.
And then I want to start getting into as well as like what, your average person can do to take advantage of this reset of the global monetary network.
Yeah, great points. The reason why I like to talk about this is because it gives us a blueprint, a roadmap, if you will, right? So if I gave you directions to come to my house, and I said, hey, just start driving, like you'll get there eventually. Like you don't know how long you're driving for. So like you want some sort of a map, and then you want like some roadmap or some signs along the way that tell you when you're getting closer, right? And so when you look at technology developing over these four phases, it gives us that roadmap. As I said, in phase one was like altcoins were the place to be. Clearly, we know in phase two that's not. And now we can look back through 2 years of data and see that to be the case, right? And if you would have understood this, you could have navigate that properly. Okay, so let's talk about the next two phases. So another thing that's super important to understand about phase 3 and phase 4, but phase 3 is now the synergy phase. And the reason why it's important to understand is because a lot of people miss Bitcoin. A lot of smart people, man, that I've sat down and spent time with, think that Bitcoin has...
Jamie Dimon's one of them.
Jamie Dimon, yeah. But they think Bitcoin has failed because it's not a medium of exchange. Well, clearly the white paper says it's supposed to be peer-to-peer electronic cash. You Bitcoiners just admit defeat. You've changed the narrative. Now it's only a store of value. It's not a medium of exchange. It's completely missed the mark. We need big blocks. We need Bitcoin cash, whatever, we need altcoin, whatever it is, right? Bitcoin's failed. It's not what it was supposed to be. And so therefore, I don't think it's good. And people miss the boat on that because they misunderstand how technology evolves, and they understand the monetary, and they haven't overlaid the monetary history and all those things. So as we move into stage 3, we start to see the synergy phase. And this is where things start working together. And if we overlay the monetary evolution chart, we've gone from collectible to store of value, which in phase 1 was collectibles. It was like Bitcoin was like, I don't know, it was like this cool thing. Maybe it'll work one day. Maybe it won't. Let's just trade it for some pizzas and see what happens. Like we're just playing with it. And really that phase was bookmarked collectibles. What was the final stage of crypto in 2020, 2021 was NFTs, collectibles. That was it.
Right.
It's crazy when you look back how this just overlays perfectly, right? But now we've gone into the store value phase, clearly. I mean, that's what Michael Saylor doesn't want to call it an MOE. He just says it's only a SOV. We're clearly in that store value phase. The sovereigns, as you mentioned, the sovereign wealth funds are buying at store value. That's the phase we're in now. Does that mean it's failed? No, because things evolve, as I made the case. And so I believe the next phase is where we go into the medium exchange phase. This happens after 2030. And so if you understand that, you don't go, oh, it's failed, I won't buy it. You go, no, it's going to happen. We're just not there yet. And the reason, the best way that I could sort of explain this is Gresham's law. And Gresham's law is that bad money drives out good. And so what that means is that we never want to use a good money if we have a bad money to use. And the best way that I can explain this, I told you I was speaking at this conference in January. It was a gold conference. They have me to come as the token Bitcoin guy. It's the third year I've been there, and my room was packed out more than anybody else's. Everyone wants to hear about Bitcoin. But I explained it to them that Gresham's law states this. And so what gold bugs know is that up to 1965 in the U.S., all quarters and dimes were made with silver. They no longer make quarters and dimes with silver anymore. Now, you will not find a pre-65 quarter or dime in circulation today. They're nowhere to be found. And if you did happen just randomly, someone gave it to you, you wouldn't spend it because it's worth way more than a quarter or a dime because it's real silver. So that's Gresham's law. Now, we hoard the good quarters and dimes. We spend the bad quarters and dimes. But gold bugs and silver bugs, when you go onto like a gold website to buy gold bars or rounds or whatever you want, they have bags of what's called junk silver. So I can buy a bag of pre-65 quarters and dimes. Now, why would I buy a bag of pre-65 quarters and dimes versus a round or a bar or something like that? Because gold bugs think that there's this Mad Max world scenario where the currency breaks down and a gold bar is too big for small denominations. So I'm going to need the little dimes for little purchases. But what does that say? Thinking back through Gresham's law, what that's saying is, well, there is a world where the bad money fails and I'll need to use good money. So what that means is we would only use that money if that's the only type of money we could use, right? So as long as I can buy my cup of coffee with dollars, I'm going to buy my cup of coffee with dollars. Why would I buy it with Bitcoin? Now, if I'm in North Korea and I can't get any money, then maybe I'll use Bitcoin because I need it for something that dollars or fiat can't be used for. El Salvador is a good case. Mike kind of tried to call me out on this, and I understood his point. He's like, well, that's not necessarily the case because in El Salvador we're using it and dollars work here. Yeah, but in El Salvador, a lot of people don't have bank accounts. A lot of people don't have bank accounts. A lot of merchants don't have merchant accounts either, and so it is solving a need that the fiat money has failed. So anyway, in small pockets, this is happening. Afghanistan women can't have bank accounts. Okay, great, it helps there, right? And I don't mean that in a light way. That's what it's for. That's the real value of Bitcoin. That's what I'm here for. But so we'll start to see that happen. But I think really where the synergy phase happens, and I've called out, is really it's technology. And so we're seeing the rise of now AI and these AI agents. And these AI agents are blowing up. I mean, in just the last 6 months, they've come from not even a thought to like all of a sudden they're going to take over the whole world. And really what they are is they're just autonomous AI bots that I could build to go do a bunch of tasks. And already we're seeing somebody, I forget who it was now, sorry, but I saw them post a video online of it going and searching the web, finding a domain name, and buying a domain name using Bitcoin Lightning. And so these, and an AI bot cannot have a fiat bank account. It's not a person. It can't pass KYC. And also you can't do microtransactions with the fiat system. So all of a sudden we have this rise, this massive rise, this super like parabolic rise. They're projecting AI agents to grow like 400% over the next decade. And we have all of a sudden we have this rise of these bots needing to have accounts and being able to go out and spend money, but it doesn't work in a fiat system that we have today.
How do we get to a system where that works?
Well, it works. Like I said, somebody just posted a video a couple weeks ago of an AI agent literally going and doing a predefined set of tasks, doing the research, finding a domain name, going and buying it using Bitcoin Lightning or using Bitcoin over Lightning, I should say. So it worked. It's done. It's happening. Incredible. And so as this ramps up, it'll become more and more rampant. And, certainly it'll still continue to happen in North Korea and Afghanistan and El Salvador in those pockets. But I think on a wide scale, me in America, I'll be using my dollars for coffee, but my AI agents are going to be spending a lot of Bitcoin.
So can we drill down deeper a little bit? I know I want to be semi-conscious of time here, Mark, for you. But I think this concept of AI agents and the intersection of that with Bitcoin is super interesting. I guess for people who are net new to Bitcoin, we're talking about Lightning here. We're talking about just an AI bot going out and spending on its own. What is the value to the Bitcoin network there? And why should people be paying attention to this essentially?
Well, so back to the 50-year cycle. We'll keep going back to that. So remember, I talked about how the Bitcoin cycle or that the 50-year cycle isn't just a new technology. It's a cluster of technologies that together combined give us a new set of building blocks to build things that we can't imagine. And so this is the hard part for people to understand. Humans are no good at imagining the future because what we do is imagine better versions of what we have today. We don't imagine new things because we don't have the things to build those new things. So for example, I mentioned earlier, I started early in the internet days. And in those early internet days, we imagined one day we'd be doing a video call. One day we'd have these like chat rooms where like they'd be like a virtual town hall. Maybe we'd even be able to buy something online, they said. But we didn't know that our car would be hooked to something called a cloud, using something called social media to navigate us around traffic. We didn't know that. we didn't have social media or a cloud. So we couldn't imagine that, right? And so that's what I mean. It's like we have Bitcoin, which is amazing, and there's all kinds of things that it's doing from redesigning energy grids to like whatever, right? And then we have AI. That's another piece of technology. And then what happens when you put them together? And how does that go build things that we hadn't even thought of? So I think that's sort of how I think about that. I guess the question was like, what should people be paying attention to in regards to that?
Yeah. So like what do you see in the immediate term for people who are just net new to Bitcoin? We've done a lot of market talk. What are some other things tangential to Bitcoin that you find really interesting? I know when I was speaking with James last week, there's a ton of interest not only in the AI sector, but HPC, energy markets, and that sort of thing.
Yeah.
What is most interesting to you in these upcoming developments?
Yeah. So we've basically the AI piece. I want to talk. I'll come back to that. But the AI piece is just one more reason why Bitcoin adoption is coming and why Bitcoin is continuing to grow and Bitcoin is continuing to demand. And we talked about the geopolitical angle. We talked about the monetary debasement angle. So it's just one more data point of why Bitcoin adoption is coming and why it's here, right? As far as like where am I thinking things are the most interesting? To be honest, I have been thinking it's really about like human rights and freedom. I mean, I came to Bitcoin for freedom. I was like, man, in 2015 when I started buying it, it's like we finally have a tool we can win. This can like limit what the government can do. Like this is it, and I still think that. But today, I'm certainly more excited about the tech side of things right now, just because like seeing how fast it's starting to integrate into other products, and so like as a Bitcoin venture investor, I've been for a number of years now. I've looked at hundreds and hundreds of deals, and it's like, do we need another Bitcoin wallet? Really? Um, I get kind of tired of that. And it's like, we don't need, I've been saying now for maybe a couple of years, we don't need more Bitcoin products. We need Bitcoin in more products. And so like, think what Proton Mail just did by adding Bitcoin into Proton Mail, for example, which is like pretty cool.
So cool and not being talked about enough.
Yeah, not being talked about enough. So those types of things are what excites me. And then back to the AI agents. If you're not using AI every day, like you're just missing out. I mean, if you're not even just like I'm on like voice mode now, so like I mean I'm just like talking to the thing all the time, and I'm just rambling and I'm connecting dots and I'm using it for all types of things. I was on a coaching call with somebody yesterday, and I was like, he's like, I want to start trading and I want to learn how to trade, and I used to run a trading group. Most people lose money. Trading is not something I'd recommend. I said, if you really wanted to learn how to trade, what I would recommend is learn how to do options and just roll options on assets you want to own, like Bitcoin and MicroStrategy. And just roll options on MicroStrategy and Bitcoin. Worst case scenario, you end up owning the asset, which you want to own anyway. But right. Best case scenario, you own a bunch of cash. He's like, well, how would I do that? I said, go to ChatGPT and say, you are the best option. So you want to give it a roll. Like, this is who you are. A persona. This is the job. What your job is to do this. Here's the context I'm looking for. Right, this is how you make like a prompt. I'm not going to go through all that. But and then have it teach you how to trade options on like seriously. So like you could use it for anything if you're not using it. So I'm excited about that. But then again, more excited about where this converges with Bitcoin together. And so how do we build these AI agents to go buy things with Lightning, with Bitcoin, and what will that power? And I don't really know, but I'm on the forefront trying to find those deals that we can invest into.
Super exciting. I can't wait for the day that I myself have my own AI agent trading on my behalf with these options, maximizing our revenue, maximizing my Bitcoin earning potential. I think that's all super exciting. And it's only going to ramp up.
I can tell you, just, I mean, as alluring as that sounds,
yes.
I don't want to call it any names because I'm privy to inside information, but let's just say one of the big public companies uses this strategy to show revenue. And if they would have just bought the Bitcoin and held it, they'd actually be further ahead. Now, for them, showing the income is important for them, but they actually have less money than if they would have just sat on the Bitcoin. So it works for them because of what their needs are. But for the average person, you're probably better off just sitting and holding it.
Oh, always great advice, Mark. I know we're coming up here on time. We didn't get a chance to close out the transitional phases. So maybe real quickly for the audience so that they don't kill me for not closing this one topic out. Real quickly, what is the last phase? Where can people go find more of these types of conversations that you're having? I know you have a great YouTube channel. You're a very pivotal voice and educator in the space. So I want to make sure people have an opportunity to follow you if they aren't already. And to close things out, Bitcoin 2025 is coming up in May, and I know you're speaking, so maybe some brief insights into what you'll be speaking on then too.
Yeah, so I mean, to close it out, 2030 to 2040 is that synergy phase, AI agents, we hit that medium exchange phase. And then I believe by 2050, and probably sooner, I mean, I believe what I put out was actually super conservative to what I really believe, but it's already seems so sensational that I couldn't go further. But I think eventually by 2050, it just becomes a unit of account. And it's like, we already talked about all the geopolitical reasons and why that would be important. And things just get repriced in that. Somebody tried to call me out on Twitter the other day or X, I should say. And they said, you obviously have never read Human Action. I'm like, well, I have read it. What's your point? Well, Mises talks about species money and blah, blah, blah. I'm like, well, Mises also said that in economics, there's no such thing as a constant. And so through all of history, we've used like commodity money to measure things, but oil changes all the time and the gold supply and demand changes all the time. And so all these things are always shifting that we're using to measure. And for the first time ever in history, we do have a constant. He was right at the time he said that, but now we have it. And so I think eventually 2050 beyond, maybe 2055, I don't know, could be sooner. But eventually that final stage is becoming a unit of account. And so that sort of closes that out. I am super excited about being at Bitcoin 2025, and anybody listening, like, you got to go. Like, I think now is the time to get back to events. You got to be at events, and it's been that way for a while. You got to build your community. You probably sound like a psychopath talking to your friends and family at home. Like, go talk to other people that understand this, right? Build friendships, build community. It's like the most important thing. And I know a lot of people are like, why would I spend $500 or $1,000 or $2,500, whatever the tickets are, whatever tier you want to get? Like, why would I spend that money on a ticket? Like, I'll just buy more Bitcoin. It's like, the reason why is because most people go about building wealth all wrong. So what happens is most people are trying to make more money, financial capital. Why would I go spend the money on that? I'd rather just buy the Bitcoin, chasing financial capital. But the problem is financial capital is a byproduct. It's not something that we should chase. What we should be chasing, what we should be building is relationship capital. And then we want to build up our mental capital, skills. If we have ideas and we have skills and we know the right people, then the money becomes a byproduct of that. And so by going to an event and learning, building up your mental capital, walking the floor, looking for new ideas, getting ingenuity, meeting people, building relationships, that's what brings the money. So sure, put your $1,000 into some Bitcoin and go hodl on a hill, and maybe in 2030 come back out of a hole and maybe the world will be different for you. Or maybe build up your skills, build up some ideas, meet some new people, and make 10 times that, or 100 times that, or 1,000 times that, and maybe change the world.
Mark, there's no better way to close it out than with that advice. I appreciate the time today. One last time for our audience, where can people find you? Where can people find Matador, and where can people find Bitcoin Opportunity Fund?
Yeah, I'm not hard to find. Just Google Mark Moss, but I'm on YouTube is where I spend most of my time. I go in spurts on Twitter, but YouTube is where I'm pretty consistent. So just find me there, Mark Moss, and on Twitter as well, onemarkmoss.com. And just send me a DM on social media if you hear this and you want to find out more about Matador or Bitcoin Opportunity Fund. I'd love to talk to you more about that. So just shoot me a DM.
Awesome. Mark, it's been a pleasure. Thank you. Looking forward to having you on next time. Is your company ready for the next evolution in financial strategy? Bitcoin for Corporations is your partner in securing the future of your business. With exclusive membership benefits, our comprehensive masterclass, and a network of trusted service providers, we provide the insights and resources to help you incorporate Bitcoin into your financial strategy, ensuring stability and long-term value. Strengthen your business. Innovate with confidence. Bitcoin for Corporations, protecting your treasury and positioning you for the future.